everybody. It's Lottie, founder of the Jura Society. So pleased to be inviting our brilliant guest in conversation today, the wonderful Felicia of TILLIT. Now, she's going to tell you everything about what they do and their bespoke fund selection process. Also, a bit about her background and what it is that she's really striving to achieve through manning this wonderful, wonderful platform. Now, hello, Camilla. I'm going to try and get her in now. You know, this doesn't always go smoothly, but doesn't mean it won't work. So, if anybody's got any questions, please use and to really liven up the conversation as well. So, we're just waiting for Felicia to join us. And there she is. Hello,
Hi.
Good afternoon. How are you?
I'm good. How are you, Lottie?
Yes, really good. Thank you so much. And sorry to everybody who expected to see us yesterday, technical hitch, but it seems to be working now. So that is excellent news. So Felicia, I gave a little bit of a background on TILLIT, but I think it's always good to get it from your own words. So can you tell us who you are and what you do?
Sure, of course. Well, thank you so much for having me, Lottie. So I'm Felicia. I'm the founder and the CEO of TILLIT. And we are essentially an investment platform for people who want to invest long term and make better investment decisions. And we do that through offering best-in-class funds that our investment committee has selected. We give you the tools and the information you need to find the right ones for you. And that's what we're all about.
Well, that's very brilliant indeed. And I think it's much needed because, as we know, the world of investment can be overwhelming at the best of times. But once you suddenly, you've got your foot in the ground and you want to start managing your funds for yourself, there's so much information out there. So I think what you guys are doing is really, really helping to cut out the crap, effectively, to really have that intuitive and helpful guide with you while you're making those decisions. So that is excellent. And tell us a bit about your background, because you didn't just come out of nowhere. You know what you're doing.
Well, so I used to be a fund manager. So I essentially used to help manage people's money, both retail investors and bigger kind of pension funds, sovereign wealth funds, like institutional money. And I did that for about 8 years at an asset manager called Baillie Gifford, and I focused on Japanese equities. I love Japan. I could talk about Japan for ages. That's another conversation, maybe.
Yeah.
But yeah, so I used to do that for 8 years, and then I left to set up TILLIT essentially, and that was a couple of years ago, a little bit more now. Essentially, that was my path in the short version.
Yeah. In a nutshell. And I mean, so what was the inspiration to really set up this model that you've created, rather than, I don't know what other variations there are, because it is a very tailored approach and it's really helpful. So what was it that you saw as a particular gap?
I think for me, and like a lot of founders, you start off by a problem that really annoyed you, like quite personally. And for me, it started out with a problem where I was trying to invest my own money when I was a fund manager, and I used one of the large platforms, and I found it quite hard to make a good decision. And for me, a good decision was based on not just options, like there's loads of options, right? Like that's great, and you want access, but then beyond that, how do you filter that down? How do you find, why should I invest in this UK equity fund versus these other 350, and I found that the information that was available to me as a personal investor just wasn't sufficient, and I'd have to go on loads of other websites and spend so much time trying to find that information. Whereas conversely, as a fund manager, our institutional clients, they had access to us, to our team, and they could really grill us on like, why do we do what we do? How do we do it? What's the philosophy? Why are we different? And that's the kind of stuff that we need as personal investors as well, but we don't have access to that. And I think that's what I thought of, like, well, if I'm struggling to make good decisions, then, and I'm an industry insider, then probably other people are struggling too. And that's where it started of, do I have some experience that I can bring to this industry to try and build something better and join forces with other people who believe in the need for this as well, to ultimately help people be confident and be in control of their own long-term savings and make those better decisions. So I think that was really the starting point. And I think the other thing as well was, we really believe in transparency and fairness at TILLIT, and I think the industry has not covered itself in glory in those aspects. And we wanted to build a model that has a super clear and transparent fee structure. We want to be really clear with the information that we are kind of gathering from all of the due diligence we do on the fund managers. We give that back to people rather than safeguard it as an industry secret and all of those things. So it's built on core fundamentals of transparency, fairness, trust. And then we try to deliver that in the product to really help people. We're in the corner of the personal investor, really.
Yeah, and I think that's so needed. You know, as you've clearly built on this now, going from conception idea to actually the process of setting up. How did you go around that? Because there's a lot of legwork that goes behind the scenes in building a regulated product as well. So I don't know if you can give us an overview of some of the good bits and maybe some of the difficulties that you might have encountered.
Yeah, I mean, we'd be here all day, especially if I was going to go through all of the challenges. But I think the starting point, so I'm a first-time founder. It's the first time I've started a company, and so is my co-founder, Paul. And I think that is part of the beginning of the journey, right? Was for me to go off and find a co-founder. You can be a solo founder, but for me, I didn't have the technical expertise. I'm not a software developer, and building a platform ultimately needs really like strong skills and experience in that aspect as well. So part of it was building a team, finding a co-founder, and then it was trying to, well, at the same time, try to build a prototype, so something to show other people and investors of what is the vision for this. And then it's kind of raising money. This is something that needs a lot of money to be able to get off the ground. I could never bootstrap that and spend only my own savings. So raising capital was another big challenge. But then, as you mentioned, we're regulated. So compared to, I think, if you're starting any business, you have to go through what I just talked about, right? But as a regulated business, you also need, we couldn't just build a platform and send it in front of customers and say, oh, what do you think? And like, oh, why don't you start investing? You can't do that. You need to be regulated. And so for us, it was about finding a regulated, a partner. So we went down the route of finding what's called a principal firm, who we worked with to be able to work with them to be regulated and offer regulated service to the market, to learn and grow. And we have just recently become directly authorized by the FCA in January. So we now flying solo, which is brilliant and a huge milestone for the company. And again, shows that we are growing as a strength to strength, and there is real trust that we're building there with both our customers and our partners and our investors.
That's brilliant. And just touching on your customers, who is your typical user or your client?
So it would be someone who's typically not completely new to investing. So we do have people who are completely new to investing as well. We don't do some kind of screening of you can't come and be a customer, but it tends to lend itself to someone who is used to picking their own investments. And because it's a DIY platform, we don't offer financial advice. And so we offer guidance, we offer information, and we offer options on the platform to try to help you find your own thing. But it tends to be someone who's a bit more experienced, someone who wants to be in control, who's interested in knowing what they're investing in. They tend to have accounts on other platforms and they're looking for a better way to make their decisions, but they might be short of time. So what I talked through earlier there around, okay, well then, never mind if you're picking individual stocks, but finding out about funds and going on the asset manager's website, Morningstar, whoever it might be, loads of different places, you might just not have that time, but you want the same level of quality of due diligence done. And so therefore coming to TILLIT, where we are curated by like really impressive experts who pick these funds, who do a huge amount of work, builds the better kind of way for them to make those decisions.
Yeah, and I think that's exactly like hitting the nail on the head there when we're talking about what some of the main challenges are that retail investors are facing. I know that your previous life, it was institutional, which is a very different beast, let's say. But actually, retail investors, you've touched on there. It's the quantity of information they've got. Is there anything else that you think are some of the main challenges that these people are facing when they're investing?
I think it's the quantity, but it's also the quality, right? It's about making sure that you have the right information at hand and making sure that that information is ideally not covered in jargon and just telling you lots of generic stuff. You need to know, I mean, one of the cornerstones of making good decisions, investment decisions, I believe, and a lot of other investors and who are professional investors believe, is that you have to know what you own, know what you're investing in. And so it's giving people options, but it's also giving them the right information. And I think the other thing is just building a product that's really looking at how does the customer think about picking their funds? What do they look for? What kind of information do they want? And then I think the other thing is also the angle of, usually on other platforms, you end up with the kind of information is like a fee, some top 10 holdings, and a bio for the person who manages the fund of they went to Oxbridge 20 years ago, and you're like, well, that doesn't tell me very much, right? So we also try to bring in more of a human touch. So we interview all of the fund managers for the actively managed funds, and we put videos up on the platform that gives you a flavor of who is this person, what do they believe in, why do they invest the way that they do, but also who are they as a personal, like as an individual. It's about who that person is a key part of getting to know someone from an institutional angle as well, and we want to give that access a little bit to the personal investor as well. So it's a combination of a lot of different things, and we're trying to build that product to make sure it adds value in all of those areas for the customer.
Yeah, and I think that's really, really nice way of going around it, bringing it to life with the fund manager behind it, the person behind the decision making, because a lot of investment is really psychologically based. It's based on human behavior, and if you can try and understand the person who is running your money and get what their ticks are, then you might feel a little bit more empowered and engaged as well, and want to be actively involved with a lot of that decision making. And so I think that is so helpful to bring these people off of their CV, which are usually quite two-dimensional, very boring. I don't know why they still do them, sort of, collateral that you might see on a traditional fund management website, but actually saying, do you know what, these are human beings too, and these are part of their decision making. And I love that. So say I'm a customer, I'm using your platform. What is the process then, perhaps, of starting out?
Yeah, so our process is an open architecture, which essentially means you don't need to download anything. You can go on your laptop, on your phone, on your iPad, doesn't matter, and you go to my.tillitinvest.com, and then you see all of the funds that we offer. So you can go into different areas. You can search for whether you're interested in sustainable funds, or you're interested in a value style of investing, or you're interested in small companies, tech companies, whatever it might be, bonds, other asset classes, and you can start off in that way. And kind of find your way down the rabbit hole through the different categories that you're interested, or you can search directly for what you want, or you can indeed see a list of all of the funds and then apply specific filters. Like, we have some quite unique filters on there as well. For example, if you want to invest in a fund that is partly managed by a woman, then you're allowed to do that. You can find those funds. You can find funds that explicitly exclude fossil fuels and so on, and you can read more about them. Now, to get full access to all of the information, you have to become a customer. And what that really only means is that you open an investment account, either an ISA or a GIA, and you can start with investing it from as little as £1. And then at that point, you get full access to everything that there's there. And that's really, it's as easy as that. And then you can choose to transfer an account from another platform if you'd like to do that as well.
That's really cool. And is there a maximum limit? If anybody's doing it?
We haven't come up against that problem yet. No. I mean, I'm not.
That would be a lovely problem to have when it comes.
Yes.
Because what is your AUM at the moment? How many clients have you got on board? What's the sort of?
I'd love to tell you, but that is something that in a very competitive industry, those are data points that we keep quite close to our chest. But we are growing. We are going into in an arena where we're trying to take share, and we're up against some pretty mighty competitors. So, but yeah, it's an exciting stage at the moment for the company.
Oh, that's brilliant. And I know that we've touched on the fundamentals of portfolio construction, when you're mentioning about the bonds and the different access points to that. Do you want to give us a little bit of a flavour? Because we do have a brilliant workshop coming up in partnership with TILLIT later this month, which we're really excited to be sharing with all of you. Do you want to just share your own sort of fundamentals for what a good portfolio might look like, or a terrible one?
Yeah. So I'll leave all of the great stuff to Gabby, who's brilliant, who's a chartered wealth manager, and she's also heads up all of our content at TILLIT. So she'll be running that workshop. But I think in the broad sense, taking a step back, and I think that's before you even get into asset classes and before you get into assets at all, I think there's a few things that you need to be sure of. And I think the first one of that would be, why are you investing in the first place? A lot of people don't even think through that step. And before you know that, like, are you investing for income? Are you investing for growth? That as an initial starting point, I think is a really important question to ask yourself, and being very clear on that. And the second after that is, how long are you investing for? Like, what's the purpose? If you're investing you're trying to maximize your savings to be able to save up for a housing deposit that you might need in 5 years' time through an ISA, versus you investing for a pension and you're I'm 35, I've had a long time to go, hopefully, to my, well, certainly to my pension, but hopefully I'll still be alive by then. And then so in that point, I have a very different time horizon, right? So I think the first one is why, and the second one is for how long. And then the third one with that is risk. And I think the problem with risk is that, again, something we could talk about for hours, not even the industry agrees on risk and what is high risk, what is low risk, what is medium risk. And I think that the simplest way to try and look at it from my personal view is that it's a combination of the first two, of why are you investing and for how long. That determines kind of what draws the box of what kind of things might you want to look at after that. And then that combined with volatility. And that is, I think, one of the things that is a topical thing right now. Markets are very volatile. And the problem with that is that when you invest, you will always have volatility. Markets will go up, markets will go down. There's no investment that will only ever go one way. And therefore, it's a case of how much can you bear looking at your account and seeing things drop quite significantly in double digits from time to time, because that will happen in some assets more than others. And I think therefore a combination of why am I investing, for how long am I investing, and how much can I stomach volatility should kind of give you an idea of what kind of risk do you want to take. And like, as an example, I mentioned my pension earlier. I'm 35. In my pension, I have several decades to go. So I've taken a lot of risk. And for risk for me is predominantly in equities. And within equities, it's predominantly in emerging markets. And it's in kind of the riskier end. Yeah, because for me, I'm like, I need growth. That's why I'm investing. I'm investing for decades. I'm investing for growth. And I can stomach the volatility. So that drives my portfolio in a certain way. But everyone's context and kind of goals and so on are different. And I think that's why it's so important to answer those first questions to decide what is for you, but also what's not for you. And then after that, I would say diversification, always key. But diversification can also come in many different shapes. So someone would say to me, I'm not very diversified because it's all in equities. And I would say, well, actually I am, because within that, it's split across styles, it's split across regions, it's split across all different kinds of things. And so diversification can come in many shapes and sizes. And I'd be wary of anyone saying you have to have this kind of split, or you have to have this number of asset classes, or this number of funds. You actually can achieve diversification with fewer things than you think, as long as they are genuinely different and they complement each other. And I think the last point is, again, then when you come to building your portfolio, is knowing what you own, knowing all of those things that we just talked about, but then understanding when you're looking at things, should I invest in this or that, is being sure that you understand what one thing does versus the other. Because otherwise you know all of these things and then you put in some stuff that you don't know what it does, and you have no idea whether you're actually delivering on those needs that you have as an investor. And I think that's where it comes back to, you know, some of the things that we try to do of making sure that you then do know that this one does do what I think it does and what I need it to do versus this other thing. So I think that those are, like, even before going into specific portfolios, which I'm sure Gabby will have a lot more insights to be able to share anyway, and I wouldn't want to take that. But I think even before you get to that stage, it's being super clear on those things, and you will have different accounts for different reasons. But I think the fundamental thing always is investing is a long-term thing, and make sure that you don't invest unless you can keep the money in the markets for at least 3, I would say at least 5 years time, really.
Yeah, and I think especially with the markets as they are at the moment, and everything that you've just said now is exactly why investment and money is so personalized. It's so tailored to the individual, and why it is really quite difficult for a lot of people to just give blanket, this is what a bond does, this is what a da-da-da. And if you don't know the behaviors of these different asset classes, or the behaviors of them combined together and the way that they interact, it can be quite overwhelming, which is why when you're providing all of your customers with this information, they can get a better feel for, it's like going and picking a puppy. Not all puppies are the same. They all have different behaviors, different, you might have like a little poodle. It's going to have very different, it's hyperallergenic. Or you might have a Labrador. You need to exercise it a lot. Not all dogs come the same. Not all assets come the same. And you want to be able to match. That's a really weird analogy. I've never used it before. But pick a puppy like a portfolio. Know what you're getting, and that it will change over time. Sorry, I don't know where I was going with that, but but yeah, puppies and portfolios. We'll cover all of that now. Do you want to share 3 quick takeaways on yeah, just portfolios, maybe the markets, anything you want. This is your time.
Yeah, I think right now, because you know, as we talked about, volatility is quite rife. Like markets are going up and down, cost of living is going up. In fact, volatility and cost of living is going just up in general in terms of there's a lot more moving factors. And I think therefore it might be a good time to sit down and look at your portfolio of like, does it need a spring clean? The answer may well be no, but I think again, looking at instead of, to the extent possible, we're all human and it's all kind of behavioral, right? But like trying not to be dragged into making decisions because of something's moved in a certain direction. Connection or yours. I'll carry on. Oh, I can see you.
No, we're all good. We're all good.
All good. And so I think, yeah, first thing is take a look at your portfolio, make sure that you own what you need it to, what you need and what you think that you own, and do any changes, make any changes then that you think, because volatility can provide opportunities. And I think that's the other thing of if you invested in something to fulfill a certain purpose and that might have done badly recently for reasons that are not related to why you bought it, then it might be an opportunity to buy more. It might be, it might not be, but you should know which one of those it is. I think the second thing with that is, having said all of that, that usually less is more. And I think that's the other thing, that retail investors, personal investors tend to fidget too much. And what I mean by that is that it's really easy to witter away a return through trading costs and fees. And I think therefore staying long term, doing less is usually actually harder, but can over really long periods of time. There is a lot of data suggesting that that can also help in terms of returns. So making good decisions at the beginning and then leaving them and staying long term. Obviously, if you need to change things because of something's not doing what you need to do anymore, but generally trying to do less, I personally think tends to be a slightly better thing, even though it's harder at times. And then the third one would be, and I always say this because it's so important, is to keep an investment diary. And it doesn't have to be super geeky and take lots of time, but it's one of those things of, if you write down when you buy something, why am I investing in this, or why am I selling this, even just a sentence, so that your future self can have something to rely on when you're panicking in the volatility of looking at like, why did I buy this in the first place? And then you might say, okay, that's why I should buy more or sell it or do something else. And it helps you learn, it helps yourself keep yourself accountable, and just generally kind of evolve on that journey to being in control and knowing what's going on, especially when things are volatile and you're panicking a little bit. So keep an investment diary.
I love that idea.
Definitely.
I think that's really, really sensible and a really fun way of actually engaging with your decision making as well, because you often think that, oh, I'll keep a diary, my journal or anything like that, but I think justifying your decisions at that moment in time is really hard to remember what you were thinking at that time. You might be like, oh, stupid former me, but it might be like, oh no, she was making sense then. Well, now it's me being silly.
And also I think it's really easy to kind of fill in the blanks the way that you edit after the fact, of like the beauty of hindsight, and then you might say like, oh, the reason I did this. And so I think it's really important to keep yourself honest. It genuinely helps. I think it doesn't have to take a long time. So that's my final tip. I think everyone should do. Anyone who's investing should be doing that.
That's a brilliant one. Well, thank you so much. So where can we find you, apart from in March later on when I'm going to share the details for the webinar? Where can we find TILLIT?
Yeah, so TILLIT, if you go to www.tillitinvest.com, or indeed if you want to go straight into the platform, you just put my.tillitinvest.com instead. And that's where you get straight into the platform and you can find out more about us and the funds and the fund managers. And then also if you are on social media, then the hashtag TILLITInvest is where you find our accounts on Meta, Insta, Twitter and LinkedIn, all of those. And then, yeah, indeed, the webinar or the workshop, as you mentioned, on the 22nd of March, genuinely that I would highly recommend it. Gabby is brilliant. So you're in for a treat for that one.
Oh, that's amazing. One more thing before you go. Where's the name? Tell us about the story of the name.
So TILLIT means trust in Swedish, and I am Swedish. And it's something that my co-founder and I came up together with a long list of names. We wanted a word that had meaning to what TILLIT is about, that was easy to pronounce, and we struggled and wasn't taken by someone else in the same industry. And we struggled to find it in English, and we translated the whole list into various languages, Swedish being one. And it was actually my co-founder's wife who picked up TILLIT from the list. And so it was on that path. And TILLIT also is is a palindrome, so it's spelled the same way backwards and forwards. So it's quite fun from a branding perspective of our designer finds that exciting, and it means that we can do some really cool stuff with the logo and various things as well. But fundamentally, it encapsulates what we're all about and what we're trying to earn from our customers.
Oh, brilliant. No, I love that story. I think that's a brilliant story. Thank you so much for sharing all of your wisdom, your stories, and amazing fun facts as well. It's been a pleasure chatting with you. Thank you to everybody who's joined us, and I'm going to share it with everybody else afterwards as well. And we look forward to seeing you a little later this month. So I'll say bye for now, and thank you again so much.
Wonderful. Thank you. Bye for now.
Thank you. Bye-bye.
Bye.